wallstreet.com. Thanks so much for tuning in. Again, if you're enjoying some of the content we're providing here, please feel free to subscribe to the channel below, and also certainly head over to followwallstreet.com, and we would certainly encourage you to sign up for that twice monthly free newsletter that will alert you to very succinctly alert you to where Wall Street is rotating their money to on a month-over-month basis. You're going to be able to see very clearly what sectors are outperforming the S&P 500, which indicates where Wall Street is rotating their funds into. And it's always good to participate in what Wall Street is doing with their money, as opposed to trying to do your own work and guess, just take shots in the dark as to where you should be allocating your funds. So up on the screen here, we've got a very simple chart of the S&P 500, the daily chart over about a 2-year window. You can see, and as we all know, the S&P 500, the stock market, has been in a downtrend since the start of 2022. But what's interesting here is that the financial sector, this line here, is a representation of the financial sector's performance in relation to the S&P 500. Okay, again, this is not a chart that gives you the performance of the financial sector ETF, but rather the performance of it compared to the S&P 500. And as you can see, back in about mid-March of 2021, entered into a channel, and it hit resistance here that it hasn't broken out of ever since back in June of 2021. And so what we're doing is we're watching this channel here. If you compare the financial sector ETFs to the S&P 500, this sideways pattern in the performance would tell you that the chart of the financial sector would look nearly identical to what you're seeing on the S&P 500. However, this time, as the line is rising, it tells us that it's starting to outperform again, just like it did here back in early 2022. It did here back in mid 2021. So what we're doing is we're going to be taking a look to see if there's any indication that it's going to be breaking out above this performance resistance line that was established back in June of 2021. So what we do is we hop over to the financial sector seasonality. We want to see over the past 20 years, how has it done just in regards to itself, its performance in regards to itself. We can see here that in the month of November and December, over those 2 months, in November it has closed in positive territory 60% of the time. In December, it has closed almost 80% of the time in positive territory, with a 1.2% average return as well as 1.7% average return respectively for those 2 months. And so, although it may not sound like much, it does tell us that 80% of the time we're closing in positive territory. So that tells us, well, it might be worth taking a look at some of the industries inside the sector. And we pulled up actually the Dow Jones Asset Manager Index, and we found that also in the month of December, which is ahead of us here, we've got a 78% of the time close in the positive territory over the past 19 years, with an average return of 1.1%. May not sound like much, but again, it kind of encourages us to look further into some of the stocks going into the month of December, which is coming up on us in a few weeks. We want to see if there's anything interesting, and we certainly found a stock that we liked. We're going to be taking a look at it because it hasn't had a nice double bottom pattern here on a weekly chart, and we want to be seeing if it's going to be outperforming, as well as heading into further positive territory over the next 6 to 8 weeks. So this is APO, Apollo Global Management. We've got up on the screen here the monthly, weekly, and daily charts. We're going to actually hop right down into the weekly charts so you can kind of see why it has piqued our interest. What we have here are 3 moving averages. Number one, we've got a break above this sort of prior resistance here at $61 a share on high volume. That's a very encouraging sign going into the next several weeks. We also and obviously probably had some great earnings. We didn't check into that just yet, but the earnings that were released probably helped that along. We also had some divergence here in the PPO oscillator. But all in all, this looks pretty good going into the next several weeks. Now, if we hop over to the daily chart, you're going to see a bit more clearly that it is certainly worth keeping an eye on. Again, you got the breakout of the resistance here, and on higher volume, we've got a crossover on the PPO line. Some folks like to use the MACD line, and we've got some ADX momentum here telling us that this may be quite a legitimate move. So what we're going to be doing here is taking a look and keeping an eye on it, seeing if it'll pull back to the moving average 18 right here. maybe somewhere down to $58 or $60 a share, and kind of pick an entry point at that time to see if it's worth going along into the month of December. So there you go. That's one of our picks that we're going to send over your way, and we certainly hope that this video has helped you. And head over to followwallstreet.com and certainly sign up to that twice monthly newsletter. You certainly won't be disappointed. It is greatly beneficial for the readers who are picking that up right now. So take care, and do be careful out there.